Typically, when you're looking for really, really high returns, and they're promising you that, you probably should take a step back and ask a few questions, okay? Hey, welcome to the Guaranteed Retirement Guy Show. So I want to talk to you about the 5 reasons you should not buy an annuity. Now, that's kind of weird, right? Why would I be telling you not to buy an annuity, right? Aren't I trying to sell you annuities? Well, yeah, but you know what? There are times where maybe an annuity would not be right for you. So I'm going to share with you 5 reasons why you should not buy an annuity. Reason number 1, you're either too old or you're too young. If you're too young, maybe the stock market's a better choice. If you have, if you're 20 years old and you've got 40 years to retirement, okay, maybe if you're looking for higher returns for a much higher amount of wealth later on, then usually it makes sense to invest and be a little bit more risky. I think risk is not a bad thing. I like to have guarantees, and I think that's very, very important. Absolutely. Just make sure you're also, exposing yourself to a higher potential for growth and other things too. Another one is too old. If you're 90 years old, maybe an annuity is not the right choice. I had someone roll some money into an annuity and they wanted to leave it to their kids. In that case, that might be a good reason to do it. But typically, if you're too old, typically when you look at annuities, you're looking for income, and you're looking for income long-term. Reason number 2, lack of sufficient funds. This is a big one because I have people reach out to me that are like, I've got 50 grand, I want to put some money into an annuity. And you can do that. But typically if you're in a cash position, of 25, 50,000, 60, 70,000 even, it might be better to just wait till you have a little bit more money, because most people who invest into annuities, to really see the biggest income effect or growth effect, you want to put more money into it. Especially if you're looking for guaranteed income, I would recommend at least putting in $100,000 or more. And most of my clients are in the $200,000, $250,000 range, and even higher than that. So you really have to think about your long-term goals. And if you want income, maximum income, then really if you're in like the $50,000 range, it's just not going to give you a lot of benefit. Number 3, expectations. Wrong expectations. There are a lot of annuity illustrations out there that will show 20, 30, even 50% returns. And you're like, wow, this is so good. This is going to beat the stock market. I make all this money. And of course, there is that saying, if it's too good to be true, well, that's what you have to ask yourself. With annuity illustrations, they could be showing a very, very high participation rate, okay? They could be showing a 250, 300%, maybe 500% in participation rates, which means if the index does 10% and you have a 500% participation rate, they're going to give you a 50% return. And that is real. That really will happen if the index gets that. The problem is when they're showing an illustration like that for 20 years, that's when it becomes very, very unrealistic, because the insurance companies can reset those participation rates every year. Typically, when you're looking for really, really high returns, and they're promising you that, you probably should take a step back and ask a few questions, Okay, reason number 4, probability of needing the annuity dollars prior to maturity. Let's say you put like $300,000 or $400,000 in, and you have a high likelihood of needing it later on. Maybe you want to buy a business or help a kid fund their college, or maybe purchase a house, or maybe you just need it for yourself. They have limited liquidity. They're for long-term growth. Okay, they're for long-term income, especially if you have an income rider on there. And if there's a high probability that you actually need that money during that surrender charge period, or if you need it, anytime soon, then an annuity is probably not the right choice for you. Reason number 5, missing the proper understanding, or not having the proper understanding of how annuities work. You need to have at least a basic knowledge, right? Hopefully even more than a basic knowledge. If you have an advisor that is teaching you and educating you properly on it, then hopefully that will be giving you enough knowledge to actually make a proper decision. So if you don't have any type of knowledge on that and you're just kind of going on a whim, don't buy an annuity. Okay, you need to have some understanding, especially on the terms and what to expect as far as guarantees, whether it be growth or whether it be income or both. So if you need some help with this, okay, if you want some help understanding if an annuity is right for you or if it's not right for you, book a call. If you're looking for income and you're looking for guaranteed income, annuities can be a great solution. If you're looking for guaranteed growth, just on money maybe that's sitting in your bank account and you don't need it for income, then maybe a MYGA or a fixed annuity would be a good solution for you. It just depends on what your growth or what your income goals are. So if that is something that you think fits you, then maybe an annuity might be something that would work for you. Any questions, comments, make sure that you put them below this video and I'll answer those as well. So look forward to chatting with you.